Okay, Aaron Adams here, Alpine Capital Solutions, putting together a short podcast for you today. I have two guests with me that I'm excited to introduce to you. One of the most common questions that we get from investors is, what can I do in this hyper market? You know, I put offers on deals. I'm getting beat out by cash buyers. I've heard a lot lately from investors. I've made so much money in the stock market, and I'm nervous about that. I mean, case in point, this week we just had a huge drop. And so today I just wanted to take about 35 minutes and break down for you how you as an investor can compete with these Wall Street funds that are buying properties, with these cash buyers, with these international investors. Many of you are aware, and some of you may not be aware, that all of China is trying to buy all of the U.S. And I've heard frustrated investors moan about competing with those buyers who are just paying full price cash for deals. And so I wanted to talk about two techniques with you today that you may not have thought about or may not have thought about in the way that we would like to explain them to you. The first one is using debt, and we know that many of you love debt and have utilized debt in the past, but using it in a refinance capacity. So buying the property cash and then refinancing. So my first guest with me today I have is Courtney Curson. And Courtney, you with us here?
Yes.
Okay, so I've thrown Courtney's website on the screen. He owns First Star Financial, and he has been a licensed mortgage broker in Indiana for 17 years. Many of my clients who have purchased properties from us in Indiana have used Courtney over the years. Very savvy broker, very savvy in terms of what investors can do and what the lending climate is right now. And Courtney, I know that you're actually working with some of my clients now. Why don't you talk about kind of what's it look like out there for investors who buy a property cash and then they decide, 3 months, 6 months, a year down the road that they'd like to finance, get some financing on it?
Yeah, a lot of investors are doing that. They're trying to spread their cash around to buy more properties during this hot market. With the industry the way it is, the term 6 months is a general rule of thumb if you want to use the appraised value to get full cash back on the actual property and refinance this question. You can refinance before the 6 month period, but you are limited to your initial cash investment. For example, if the house was worth about $100,000 and you bought it for $50,000, you can only get the $50,000 back if you do not wait the full 6 month period. After 6 months, which people usually do, you can actually get more cash back than what your initial investment was. It's a very fluid process, and the process only takes about 2 to 3 weeks from start to finish.
So that's interesting to say that. So you and I have been working together since 2000. I believe we met in 2004.
Correct.
So it's been a long time. And the good old days, right? In 2008, 9, and 10, you could it was the Wild West, right? But no more.
Yes. No, it's not. Lenders are more. I mean, actually, they're being more aggressive now than they were about 3 years ago. They're still your typical income verification, but yeah, they have laxed the guidelines a little bit. It used to be a year, about 5 years ago, that you had to wait to pull cash out of an investment property, but it is now down to less than 6 months or the general 6 month rule for the full appraised value.
All right, that's outstanding. Now, if somebody is in that situation, what kind of requirements are lenders wanting, whether it's less than 6 months or longer than 6 months?
It really is. I mean, for example, a lot of people buy them in LLC companies. I recommend if you do purchase it in an LLC company, this is probably the major key here, is the borrowers be the only people on the LLC, don't have different family members that are not on the loan, or nobody that's not majority interest. That's probably the main, I think, ticking point, because a lot of people are buying them in company names for tax purposes or liability purposes. But other than that, I mean, it's pretty simple. If it's less than 6 months, you can't get more than what you put into it via cash. If it's more than 6 months, you can get the full appraised value of cash back on that property, which is usually about 75% of the actual appraised value.
So if you were to buy a $100,000 rental property for $50,000, before 6 months, you could, since it would appraise for 50 cents on the dollar, you could get 100% of your money back.
Yes. Well, yes, correct. I'd have to appraise for roughly, yeah, correct.
Okay. But then once you get past the 6 months, it's basically 75% of whatever the market value of the property's worth.
That is correct, yes. After 6 months, you can use the full appraised value.
What kind of credit scores are lenders wanting? What's the floor?
The floor to get a really good rate is usually about 680, but more lenders want about 700 middle score between the lowest of the two borrowers on the loan.
Okay. And then income requirements?
It's standard. Go up to about 43% debt to income ratio for both borrowers on the loan. If you are self-employed, obviously you have to have 2 years tax returns because they are going to do a full disclosure.
And if the property is rented, does that help with the debt to income?
If they have a history of rental income structure, yes. For conventional, it really varies by lender. On the wholesale market, you are able to kind of switch around. That's where I come into play. So, I mean, there are lenders that do allow you to use rental income, and there are some that don't if you do not have a history of it. But more than, 9 times out of 10, you can use the rental income to offset 75% of the actual payment on the actual mortgage, yes.
That's awesome. So you just mentioned, now potentially how many different sources can you go to for funding? Because you're a mortgage broker. You're not just, one shop guy.
Correct. There's multiple lenders out there. I mean, you can have as many as 20 in your portfolio, but I deal with about 5 to 6 that actually know the industry really well on the rental side. Their appraisal network portal is key on par here, and especially in the Indianapolis area. I do have lenders that are heavily involved and have good appraisers on their board.
That's awesome. One question I always hear from investors is, let's say somebody has, and you're working with one of our clients right now, they have cash to buy 10 or 15 properties, but they don't want to leave all their cash in the properties. What kind of options do you have for investors in that situation?
For investors that do not want to just pay cash for everything and only buy half the amount that they could via financing, you can have up to 10 properties per borrower and still be under the Fannie and Freddie guideline requirement. I know Freddie does not really require, they'll do up to 6 properties and with little asset reserve verification. Once you go over 6 properties, you get the Fannie territory, and the asset restriction has gone more conservative lately. It's more conservative, but yeah, you can go up to 10 properties per borrower and stay within Fannie and Freddie guidelines, which means that you get the going rate or for a conventional loan.
So, you just in the last 16, 17 years, you've done hundreds of $1 million in financing for investors. And that's a lot for Indiana, one of the most affordable markets in the country. If you're in California, you'd be in the billion range right now, right?
Correct. Yeah. The loan amounts and properties are a lot different than they are on the West Coast.
Would it be fair to say that, obviously right after, 2012, 2011, 2013, lending criteria standards were really tight. Have you noticed them loosening as a mortgage broker?
Yes, I have substantially, especially on the rental market. Like I said earlier, they were requiring you to own the property at least a year before you can even do a cash out refinance after the bubble pop. Yes, but they have started laxing guidelines a little bit lately, more so on the primary residence side, but yeah, also on the investment properties section as well.
And this wouldn't just apply to Indiana, right? If somebody's listening to this in Washington and they wanted to do something like this, obviously you couldn't help them because you're only Indiana, but they could still have access to these same kinds of loans, correct?
Oh, yeah. It's very simple. My first request would be just Google mortgage brokers in the area. Call the first 2 or 3 that are on the list. Those are usually the ones that stand out the most and maybe have paid for advertising because they are actually doing business in that area. And just call and ask around. Just because, one person may not be able to help, the next guy on the list can probably help you just as good.
Yeah, I think it's key to emphasize from an expertise standpoint, as someone who's worked with different mortgage brokers, many of you are thinking of, I know a guy that does loans and, because our kids played soccer together. And I would advise investors to be careful of that relationship because a lot of times that guy can only work with, one lender. Whereas with Courtney's got access to dozens of different lenders and 5 or 6 that he loves, that he knows what they're looking for. He knows how they want to see the portfolio put together. And that knowledge and experience that Courtney has is what you as investors are going to want to find whatever market you're in. I can't emphasize that, I love debt. And I know that many of you love debt, but I'm telling you, if you want the best deals right now, you need to buy cash. As someone who sold over 500 properties last year, I'm not interested in waiting around for a client to get approval and get their debt to income lined up and get all their paperwork and wait for the appraiser and come back. I don't wait, not when I have investors lining up to pay cash for our properties. And so that's why I wanted to bring Courtney in today, so that you could hear from the horse's mouth. One, lending criteria has relaxed since the crash, and it's becoming very feasible for investors to get debt. But your best terms are going to be to hold the property and then refi. Courtney, do you know of any investor loan package on an acquisition loan that they can get 100% financing? Those don't exist, do they?
Not since 2006.
Right. But if an investor buys right and gets a good deal on a property, they could in 6 months down the road could have 100% of their money out of the deal.
Correct.
Yeah, and so that's a huge benefit. So think about the cash that you have that you can put together so that you can buy a property cash, and then ideally think about waiting 6 months before going and refinancing it, and you could really be happy with the result. Any final advice, Courtney, to share?
Not right now. I think you've hit every key point that I can actually bring up. I agree with everything that you're saying. Yes.
Cool. Well, we have Courtney's info on the screen. His website is firststarfinancial.com, FIRSTAR financial.com. At the bottom here, you can see his contact information on the website. If you are looking at an Indiana property, Courtney is one of the best brokers that I've worked with. Not a lot of paper sits on your desk, does it, Courtney?
Nope, it's on and off in less than 30 days every time.
So, certainly as those of you who are our clients or are working with us or attending our events, Courtney's a fantastic resource. But you need to find a Courtney if you're looking at other markets. Think of a mortgage broker. Think of somebody who has experience with investors and investment properties. Think of somebody who's been through the ups and the downs in the market like Courtney has, because they really have a different perspective. They really have an ability to help within seconds, not waste your time, because Courtney's not going to, tell you he can get you a refi or get you money if he can't do that. I think that's correct.
That is correct.
Courtney, thanks for your time today. Appreciate you joining us.
Thanks a lot, Aaron. See you guys later. Take care.
All right.
Bye-bye.
So I'd like to pivot, and Damion, you with us?
I sure am.
So I'm excited about our next guest, Damion Lupo. Damion is I have his website up here, and about the only advantage I have over you, Damion, is hair. That's it, buddy.
Yeah, but I'm more streamlined, so I'm faster.
I've written one book. Damien's written 5. I've bought a few properties. He's bought, hundreds. Not only is he a 4-time black belt, but you literally have your own martial art. Is that right, Damion?
I did. I founded Yokido back about 4 years ago.
Amazing. Now, just a little tangent. Are you an MMA fan at all? Do you like that? Do you follow that? Because I'm kind of addicted to that.
Yeah, I actually really love the guys. I love seeing the respect, because it's one of the only places where you see a tremendous amount of respect for your competition. And I just watch these guys, and I love seeing that. It's hard to see that in a lot of other sports. So I see the dedication. I see these guys fighting hard, and they're real warriors. And I don't see that in a lot of other sports. So I'm kind of a fan of some of the guys that are out there, like GSP and even Connor with his big mouth has a warrior spirit. So kind of like it.
I do too, and I'm a huge GSP fan. In fact, why are those two not why is there not fight for those two coming up?
That, you know what, that'd be an epic thing. That could surpass the Floyd Mayweather, Conor McGregor, thing.
Now, I know this for a fact, but for those listening, you really are, and it may be offensive, but you are a financial ninja. I hate to say that, right? But that's context that everyone can understand. And you have a mission of 1 million financially free people, which I think is amazing. And really for you have a passion for educating and sharing. But I wanted to bring you in today to really touch on, a 10,000 foot perspective of what so many investors are not thinking about right now. and it's tapping into money that they already have to buy properties cash. And the theme of this podcast is competing in an intense real estate environment. And that's something that you have thoughts on, and that you have. First of all, anything to weigh in on what I was discussing with Courtney? Anything to add to that?
What's fascinating is that the stuff that y'all are talking about is exactly what I'm hearing from some of my clients and some people that I've been doing some mentoring work with, where they're wanting to enter the market and they're stuck because they don't have access to cash where they can close in a matter of days or a week, and they're fighting against those cash buyers, whether it's from China or just people that are sitting on a lot of cash. And what we're going to talk about is the solutions for anybody that gives them the cash that they need to actually compete and close things, so that they're not just chasing everything. Because if you don't have cash that you can close quickly, you're dead in this market.
Yeah, I was reading a statistic that if you look at all the retirement dollars in America, which is like $10 trillion, that 98% of investors, 98% of Americans let somebody else manage their money. It sits in somebody else's trust account. They invest it for them in whatever they tell them to, whether it's in, the largest would be Fidelity. And Fidelity has averaged, when you look back at 15-year time periods, Fidelity has averaged 4% return on investment per year for their clients, which to me is just horrendous, right? It's inflation plus one, or just inflation, depending on how you look at inflation. And only 2 or 3% of Americans actually take control of their own money. And you have many, many clients that have taken control of their IRA money, their 401k money, and are actively investing it and just smashing that 4% return, don't you?
Yeah, and what's crazy about that 4%, if you're really honest, if we're being honest about that 4%, it's 4%. So maybe you're at inflation, but then when you get your money, you're going to be paying taxes. So ultimately, at best, you're going to be flat, which means you'd be better off just having the money in control under your mattress than having it exposed to the volatility of the markets. So it's really the kind of the stupidest thing anybody could do. But it's what we know, it's what we've been told and brainwashed to do. So we do the best we can. But now you're going to have some new information, and it's going to give you some new options, so that you can no longer say this was the best option. You're going to have to choose a better option.
Yeah, no, exactly. So give us the 35,000 foot perspective. If somebody has money that's sitting at a Fidelity, if they have money from a previous job, and they sit down with you, and I have your website here, totalcontrolfinance.com, where you guys really help investors with all aspects. And you can see here your book about the QRP. Break that down for us. Help explain to investors what a QRP is and what investors are using those for.
Well, just so we have some immediate context, I think a lot of people have probably heard about a self-directed IRA, but they haven't heard of a QRP. And the reason that we have heard of self-directed IRAs and not the QRP is because the self-directed IRAs have lots of fees, and they make the custodians that are basically monitoring and manhandling your money very rich, kind of like Wall Street. Wall Street gets a lot of money from fees. They have no risk, but they always have a high return on your money, on your back. So the QRP is a switch. Basically what that means with the QRP is that you're going to have your money, your retirement money, whether it's 401k or IRA money, or even federal government like thrift savings plan, any basic qualified money, and that just means it's like there's a tax advantage to it. Any of those retirement funds, you end up through the QRP process, you're able to have all that money in a checkbook that you can write checks from. And what that means for you is that when you see a property, now all of a sudden you have all of your retirement money, you can go write a check for that thing and close today if you wanted to. That's how fast it is. There's no more custodian, there's no more delays, there's no more qualifying. As fast as you can write a check or wire money, all of your retirement money is available for you to engage and invest. And it's not just that you have access to it, it's that you have all of your money and you're not being feed to death. And that's one of the huge advantages here, that you're going to actually keep your money, because you can make 10% or 12%. But if you're giving away 3, 4, 5%, what's the point of all that work just to make 5%? That's crazy.
Yeah, it's funny. You and I have this kind of mission to educate people, and I'm always amazed as I meet 30, 40, 50-somethings who have no idea that they can, one, control their own retirement money, and two, invest and diversify into real estate. Because, their guy at Merrill Lynch was never going to sit them down over lunch or after their kid's baseball game and say, hey, you could take some of the money that you have with me that I get paid on for managing and don't make you anything, and go invest in something real like a piece of property. And so it's amazing how few people know about QRPs and that they're out there.
Well, and there's no real advantage for a financial institution to ever really tell you anything. At best, what I've heard, some really awesome financial advisors, and there are there are some awesome ones out there. They'll say, yeah, this is a great thing for you to take control of some of your money. But what most of them will do is say, ooh, if you want to take control, let's do like 3 or 4% of your money. You can go do the crazy speculative real estate stuff or the gold or whatever that crazy stuff is. And the rest of it, just let me keep, and I'll make my 3% on it, and everything will be fine. Well, you know what the funny thing is? A great question for a financial advisor is to ask them, hey, are you making money? How do you make your income? Is it on fees or is it on the actual investments you make? Because I guarantee if you look at life insurance people, if you look at people that are managing money with kind of Wall Street firms, they're making their money on fees. They're not making the money on the actual life insurance or the mutual funds or whatever that they're throwing at you. It's all about what they're selling you. So it's an integrity issue to me. And so when I'm selling my stuff, I'm investing using these tools. This is what I do. So there's a huge integrity around eating what you're cooking and not just pitching it out to people and then making a bunch of fees on their back.
I love that you say, one of the ways I always say it is don't take advice from someone if you won't switch with them. So,
Yeah.
When you sit down with your next financial advisor and they give you that sheet to fill out showing your net worth, ask them to do the same thing.
Yeah, I did this with a life insurance guy about 10 years ago, and he wanted me to buy some life insurance. And I said, I want to see your personal financial statement. I want to see if you're buying everything you're trying to sell me. He opened his financial statement up. I mean, this is a guy that was in integrity. He said, here it is. And he had $4 million in cash value. And I said, okay, I happen to hate whole life, bank on yourself. I don't like it. It's my personal opinion. But he was in integrity. So I gave him $100,000. And I said, you know what? I'm going to invest in the stuff that you buy yourself because I trust that you're not just throwing something at me that's BS to make a fee. You're actually doing exactly what you're telling me to do. So to me, that mattered. And that's what I would follow in terms of advice.
Yeah, my wife and I personally have over 200 properties that we own, and free and clear. And as an investor who actively, she has a SEP. I have checkbook control over my retirement money, and I can tell you that, if you're going to take 40, 50, 60 grand and buy one property, fine, that may work. But if you're looking at actively managing your money, your 401k, your IRA, doing flips, doing notes, day trading, I trade options and like that, then the QRP is the way to go. The QRP is the way to go because you have access to your money and you're not paying fees every time you do an investment, right?
Yeah, you're not paying fees for transactions. You write checks, and as long as your bank isn't charging you $8,000 to write a check, you're fine. And basically, that's going to be a free transaction. The thing that is just unbelievable that people really need to pay attention to. I mean, everybody, if you're listening to this right now, this is the most important thing. The QRP has the ability. You get a built-in Roth component, and what that means is that you can invest tax-free, meaning you're going to invest, you're going to make money, and you're never going to pay taxes. And there's some ways to do that with real estate because of 1031 exchanges and such. But here's the thing. You don't know what the tax rates are going to be when you're 59 and a half years old when you might pull money out. Once you get money into a Roth state, that means that when you pull that money out, you're never paying taxes on it. And an even cooler thing for big picture family legacy wealth is as you're growing your wealth and you're passing it along to people, you're going to eventually pass on the money that you're making. And if it's in a Roth QRP account, which is part of what you get when you set up a QRP, you pass that money on to your kids or grandkids. They're going to have this money to invest and spend, and they're never going to pay taxes. And what does that mean? That means you're opting out of the tax system, and it doesn't matter whether tax rates are 20% or 70% or 90%. And they were 90% in the 50s before John F. Kennedy changed them when he was president. So if you're certain about the tax rates that you're going to be all set and you're good with paying whatever it is, then fine. But this is a way for you to opt out and not worry. You no longer care what Congress does with their next tax reform bill. It doesn't matter because you're literally paying zero going forward. That's a huge strategic advantage, and it puts you in a place where you can do deals that other people can't do because you're not paying taxes and they are.
Yeah, I love that. That's why, I pay my each of my kids have Roths, and I pay them every year, and I make sure that I pay them the most amount that keeps them from having to pay taxes on that. But essentially for my children, that's become a triple tax-free opportunity because they're not paying taxes when it goes in, they're not paying taxes on the growth, and then they won't pay taxes when it comes out. And when you use the education that we're talking about here that you offer at your totalcontrolfinancial.com platform. There's all these loopholes. There's all these golden tickets. It's like gold-plated Monopoly that all rich people are playing with. And, I started as a high school teacher 20 years ago, and it's, at every stage, it's like, get a little bit of knowledge, tweak your setup, tweak your opportunities, tweak the way that your behavior is, and take advantage of what's out there. And this new tax plan that came out, the Trump tax laws, that I've spent the last month binging on the QPI and I'm sorry, the QBI and all the opportunities that are out there, because there's going to be a million new loopholes and a million new ways to take advantage of what the federal government is laying out there, as opportunities for us. And this is one of the hugest opportunities.
It is a huge opportunity, and it's funny. I heard somebody saying that the way to understand the new tax bill was to take Nancy Pelosi's advice on the healthcare bill. She said, "Hey, you have to actually pass it, and then you can figure out what's in it." We don't even know what's in this thing yet. We don't know what the implications are. So, but as those come out, it's important to start engaging with it and learn by doing. And that's one of the advantages to setting up a QRP and really understanding, getting a copy of the QRP book that I have available on the site. Get it. It's free. I'm literally going to mail it to you. And the reason I want you to get it is so that you can start to understand this tool. And it's not, maybe you have 20 or 30 or $50,000 and you're thinking, well, I only have a small IRA. Here's the thing though, once you understand this, you're going to be able to share it with people. And not only are you going to be helping them tap into their money and getting them out of this Wall Street roller coaster and getting them off of it, but you're going to also have access to part of this $15 trillion that's stuck in Wall Street. You help your friends, your family, your neighbors, or whatever get control of their money. Guess who's going to be available to fund your deals that you want to buy? You're not going to be stuck buying one or two properties. You're going to be able to buy as many as you want because you're tapping into a resource that's basically untapped right now, except by Wall Street.
Yep, I love it. Now, let me, I promised people we'd stay under 30 minutes, and we're doing great. But let's K through 12. Let's bring it all the way back down to basic. I'm listening to this. I'm intrigued. First step I'm going to do is go to totalcontrolfinancial.com and get a free book on your guide to QRP, right? Good starting point. How much is it going to, if I got $100,000 sitting in Merrill Lynch, in a 401k from a previous job or in an IRA, what's it going to cost me for you to set this up for me? What will obviously I'm not withdrawing the money, I'm transferring it, but what does it cost for you to set up a QRP?
Yeah, it costs $2,500 to set it up, and then it's $300 per year. And those are flat numbers. It doesn't matter how much you have in there. We don't charge a percentage of fees like custodians do, like in trust or any of these places. It's flat, it's transparent, it's consistent, and you're grandfathered in for life. So that's what you pay. And then once you have control of your stuff, you're not going to pay additional fees. So it's very, very simple, very straightforward. And it's locked in. There's a lot of what happens in the industry is you get these promos where somebody will say, "Oh, we can set you up with self-directed IRA and it's free," or it's only $50 or it's $100 or whatever. But what they're not telling you is all of the transaction fees and the asset percent fees. And there is a way for them to make money. There's a reason that you've heard about those and you've not heard about the QRP. It's because you're going to have to decide, do you want to keep most of your money long-term, or do you want to give away a big chunk of it long-term for something that basically is a shiny object right now? It's called a freebie up front. This isn't free. You're investing right now to get control and to stop getting bled to death long-term.
Yeah, and actually I think $2,500 is cheap. I've seen some law firms that will set these up for $10,000. Mm-hmm. Is that expensive? And then, you mentioned, I've seen some self-directed IRA companies. In fact, this one's like insidious. You're going to die. This company's set up, it's based in Chicago, and their whole goal is to get the little accounts, the little IRAs less than $10,000 and just nickel and dime them to nothing. That's their whole, it's like, how do you guys sleep at night, man?
Yeah, and that's really the industry. The industry, it's sad, but most of the industry is figuring out how to make itself profitable. It's not there. Wall Street is not thinking about how are we going to make the American population rich. They're thinking about how are we going to get rich? How are we going to make another $10 million bonus this year? That is what they're thinking about. It's the sad reality that it's not an altruistic existence like when you were talking about teaching. And that's it's a gift to humanity to teach. Wall Street is not a gift to humanity. I mean, give me a break. You got to look out for yourself and for your friends and your family and pay attention, and you got to be educated, and you cannot turn your stuff over to somebody and just smoke a bunch of hopium and think it'll all be okay in 20 years. I mean, that's the craziest thing I've ever heard.
Yeah, I love that, man. Can I have a copyright on that for the next time I speak? I quote you.
Yeah.
Thanks, dude. Let's say you and I are on a flight and we're about to land, and you've been breaking this down for me. Final words of advice. What's the 2 cents from one friend to another that you're going to tell me to get going on this?
The bottom line is nobody's going to care about your money more than you, and you've got to have control of it. And the only way to have control of it is to have it in your hands. It's not about having an account number where it's digital and maybe it'll all work out because Merrill Lynch is looking at it. You've got to have it in your hands. And this is a way to get your money in your hands and to opt out of the tax system. You got to be educated. It might be right, it might be wrong. But the point is, you got to be educated and make an educated decision on this. And that's why you want to get this book. And that's why you want to learn about this right now.
Awesome. So, totalcontrolfinancial.com. Go to the homepage, click on the free book. It'll take you to this link. That's your way to get started. If somebody's like, look, I want to just get this set up, what's the best way to reach out? Just go to the ask a question, or what do you think?
Click the red button at the top of the page. It says call that number, and they'll set an appointment to go through the application and make sure this is not for everybody. I mean, honestly, there are people that are not responsible. And if you're not responsible, this is a bad idea. You got to be responsible for your money. And so I'm going to get on the phone with you and I'm going to make sure that this is a good fit and that you could actually use it, because I don't want somebody's money that cannot use this and is going to be reckless or hurt themselves. So it's an application. It's an interview to make sure this is a good fit. And that's how you get going.
Yeah, one other thing I wanted to highlight before we wrap up is that you really have some great testimonials on here. And a lot of listeners want examples, and I love, look, since we started working together, we've taken $200,000 out of the market, bought a piece of rental property, started being proactive on investing opportunities, and started giving $2,000 a month to charity. I feel awesome about where we are with our life financially. I'm totally clear on my money and how I want to invest it. We appreciate all he did for us. He sent us down the path that really works for us. I can't tell you how many people are scared about the market right now, Damion. You seeing that as well?
Yeah, and you should be scared about the market. There's a guaranteed correction. That wasn't what we just saw. Was not a guaranteed correction. That was a blip. Yeah. And I heard I forget who it was. It was some CNBC talking head saying, "Yep, we just had the correction. That was what we were looking for." And that guy's full of crap. Yeah. I mean, we are going to have this thing. There is eventually going to be a retraction. We've got 4 interest rate raises coming. We've got corporate buybacks that are eventually going to end. That's where companies have all this cash and they're buying their stocks, and it makes everything look good, but it really just gets the CEO and the CFOs, gets all them rich. But that money eventually ends, and when that does, there are all these things that are coming together, not to mention the baby boomers that are all starting to be forced to take money out of the market, out of their 401ks that they have to do. And there's more and more of those people, 10,000 a day, have to retire and have to pull that money out. So all these things, there's a confluence of factors that are going to force the markets down. And the wealth effect when the stock market crashes is that people get nervous and they get scared, and it pushes and ripples into other markets. So it's coming. And if you're not in control of your money, you're gonna maybe die on a roller coaster of emotional hell, and you got to get off that thing.
Yeah, it is. It's amazing to me, and I remember feeling that fear, and that was what drove me to education. And I always say to people, look, put yourself on this path of continuing education. Make that be part of your life. My wife was teasing me yesterday because I was on my 5th video about the qualified business income write-off, and trying to get my arms around every dynamic of that. And she's like, you're such a nerd when it comes to research. And I'm like, it's the key. It's the only way that I've been able to build what I have. And I'm sure you relate to that as well.
Well, Aaron, I think one of the things that I would suggest to anybody, you're asking about the plane is landing and what's the advice, go find people that are totally geeked out in their thing, because they're going to be the ones that are finding the nuances. You want to find, like, I'm a numbers geek. I can go in and I can understand the rhythms, the heart, the pulse of somebody's financial life by looking at their financials. Most people are scared of the financials. I'm a geek in that space. You're a geek in your space. Yeah. Go find people that are total geeks that are obsessed about their space. Those are the ones that you're going to learn the real depth from. And it's not going to just be some regurgitated crap that they read in a book or they heard somebody say and then they're spewing it out. It's actually their insights and their feelings and their understanding of it. So go find the geeks and listen to them.
I really appreciate your time today. And I'd love to do a follow-up where you and I just really spend 45 minutes building on what we've talked about today. Hopefully we can schedule some time to do that.
Love to.
And I think I definitely owe Robert and Russ, the real estate guys, the #1 real estate podcast on the internet, a thank you for introducing us, because they're great connectors, and it's funny how you and I are moving in these different circles, but doing the exact same stuff, which I think, just highlights the fact that there's real principles about money and wealth building and balance that apply. And when you tap into them, they're life changers. And people get to that same destination from completely different paths.
Yeah, I think there's something that I just read Ray Dalio's book called Principles, which is probably the best book I read in 2017. And it really is that everything is based on those principles, and we're all running from very similar principles. And what you'll notice is that when somebody does not have principles and they're just focused on money and they're not focused on something that's bigger than just the money, there's a weird tension that starts to unfold. You feel it. And then when you are around people that are basing their life on principles, there's a flow around it. It's very martial arts-ish, very Aikido-ish. And so but you'll notice that. And my suggestion is find those people that you feel like there's a gentle flow with, and the ones that there's a tension or you feel like, hey, this is just about the cash, run like hell from those people.
Damion, thank you for your time. It was a pleasure chatting with you today.
Likewise. Thank you so much.
All right. And just reach out to us directly. I'm at Alpine Capital Solutions. Courtney's at First Star Financial. Damion is at totalcontrolfinancial.com. And we look forward to hearing from you, following up with you, because one of us three sent you this podcast. And so we look forward to continuing the relationship. Thanks again for your time.